Here's the truth that they never taught you in school. You don't get rich by saving money on your taxes. You get rich by playing the right tax game. You see, most folks, they're stuck on level 1 and don't know more levels exist, which is called the pyramid of tax planning. You see, I had a client that I'm coaching 2 years ago, and he was scaling his business, making more money. So he had the thought, I'm going to spend money to save money. So he called, doing some renovation to his office, and he said, hey, you should be proud of me, Mario. I was like, why? He was like, I just spent $5,000 on chairs. It's going to give me a nice write-off, which is good for my business. And yes, I was like, you're right. It is a $5,000 deduction. However, he only saved $1,200. So he spent money, but still almost $4,000 still left his pockets. So saving $1,200 for spending $5,000, is it really a good business decision? He was like, well, if you look at it that way, I guess it's really not. And those chairs, he didn't even need. Then I showed him how to hire his teenage daughter to do marketing, because these kids in social media, I mean, you know, they know a lot more than us older people. I'm not old, older people. And he was able to legally pay her $14,000 a year. And she owed nothing in taxes. And he got that same $14,000 write-off. So now she's saving and investing, and he was able to have the IRS pay him for that. A lot more money in his pocket than those chairs that he didn't need. And we can actually put this back to the biblical time in Luke 14:28. But don't begin until you count the cost. For who would begin construction without first calculating the cost to see if there is enough money to finish it? That's a lesson there. Amateurs make emotional money decisions. Professionals and all-stars, they plan, they calculate, and they leverage. And this is why I created the pyramid of tax planning. And things always start at the bottom. So as we go over this pyramid and the steps of tax planning, before we get started, as always, like, subscribe, and share to our channel. In real life, I'm a certified financial planner. We manage hundreds of millions of dollars in assets worldwide, but on these social media airways, we're just giving information that's going to help you scale your business, transform your finances, and be a better person for you and your family because of it. So y'all ready? Again, comment, share, subscribe. Lego. You see, this pyramid of tax planning probably not going to be taught by your CPA, because your CPA, they typically don't do tax strategies. No knock against any CPA. I have a CPA that I use. Even though we do tax strategies, we have a person who files the taxes for me and my family. So nothing against a CPA, but their job is not to strategize. Their job is to make sure that you pay, make sure that you file, and make sure that you are on time by doing so. And you see, it's very important, because you should be having your mama and them, your cousin down the street doing your taxes, because it's less money. You see, you pay more money using an amateur than an expert. An amateur might charge you a couple $100s to do your taxes. An expert might charge you a couple thousand. But if you save $5,000, $6,000, $7,000 every single year in the strategies to make sure that you continue to have more money in your pocket because of it, what's the real cost of using that amateur? It costs a lot more than a tax strategist and a CPA. So we are going to go over the pyramid of tax planning. And with the pyramid, we start from the bottom and work our way up. So at the bottom, we spend to save. Now this is amateur level, but we should still do it. So what is spend to save? And why is it amateur level, but why should we still do it on our pyramid of tax planning? Well, if I buy a laptop, it's a write-off. That is correct. If I buy a laptop, it costs $2,000 for my business. I'm in a 30% tax bracket. I'm not getting all $2,000 back though. I'm getting about $600, but still, that's still $1,400 out of my pocket. So if I don't need that laptop, should I buy it? You see, we get this all the time for people at the end of the year wanting to buy a nice car, wanting to buy a luxury car. They spend money just to save. And yes, they save. But from a tax planning pyramid standpoint, they're at the bottom of the pyramid. If I buy a $100,000 car, it's still $100,000. Now, if I get to write it off and I'm in a 30% tax bracket, I get $30,000 back. It's still a $70,000 car. Do I really need it? I don't know. Now, levels up on the pyramid, we show how it's ways we could plan to make sure it's worth it. But just on the surface, you spending money just to get a write-off, might want to think twice about that on a pyramid of tax planning, right? It usually ends with you overspending to reduce taxes, but money's out your pocket to reduce paying Uncle Sam. How is that helping your assets? It's not, because you're not building wealth that way. How is it that me overspending to reduce taxes is building my wealth? How is buying that laptop, which is a depreciating asset, helping building my wealth? It helps me reduce taxes, but taxes is a transaction. Wealth is legacy. Ooh, preach! A tax bill is a transaction. An asset is legacy. Like Dr. Umar said 3 times, Mario. A tax bill is a transaction. An asset is legacy. And what should we be more focused on? A transaction or legacy? So the tax planning pyramid, the pyramid of tax planning. Yes, we should be spending to save, but that's amateur. That's at the bottom. As we work our way up, as our business grows, as we have the mindset to take advantage of the tax code, that's just the bottom. So the middle is income shifting. What is income shifting? How is it a way that I can make more money, which is most importantly, make more money, but with the more money that I make, move that from my tax return to somebody else's tax return at a lower tax bracket? I repeat, take the money that I make and move that to somebody else at a lower tax bracket, which means it decreases my tax liability, so I pay less or nothing in taxes. And the person who's now responsible for the taxes, they don't have any taxes at all, so we all win. By hiring your kids, your spouse, or paying family through your business is the easiest way to have that income shift. Meaning, I earn the same, but I pay less taxes. Every single person who is a business owner, if you have children under 18, standard operating procedure when it comes to us helping clients. Your kids are an advertising gold mine. Nielsen said 63% of individuals buy when children are involved in a commercial compared to adults. It's something about our soul, in our spirits, when it comes to children. So if you have a child, put a couple posts on Facebook throughout the year. Put your children as advertising. You get to pay them for it. Your child's on social media already. If they're a teenager, have them help you with your social media. Have them give you advice on marketing. Have them edit some of your YouTube videos and pay them for it. Heck, you're paying them already because you're putting a roof over their head. So by paying them, because the standard deduction is $15,000 for the year 2025, which means I get to pay my child $15,000 and they don't pay any taxes. I'm shifting $15,000 that I made that I got to pay 30% on, which is $5,000, to them where they pay nothing. Right then and there, that example saves you $5,000. Because when I pay them $15,000, it's a write-off. So that $15,000 shifts to them. That $15,000 they get, they don't pay any taxes. Again, that saves you $5,000 right then and there. Same money. So instead of spending it on a depreciating asset and not a legacy, I am building legacy because now that money stays in the house. And guess what they can do? Open up either custodial Roth IRA where that money grows tax-free. They could use it for college or a first-time home and not pay taxes or penalties. Or to take it a step further, you can put it into their SEP IRA or traditional IRA and have the money grow tax deferred. So it grows. They don't pay taxes until they take it out. And you, my friends, get a $7,000 write-off by doing $7,000 in that account every single year, shifting more income from you to somebody else. So the pyramid of tax planning, the income shift. Let's find a way to shift the income that we make to somebody else that's going to have less taxes for you, and legacy for your children, or for my grandparents out there, for your grandkids as well. If your children have W-2 jobs, they're not paying their grandchildren, which is your grandchildren, their children. You catch the drift. Then you can actually use that for your grandchildren. Real estate, big way. Have your grandkids do things around the property, your real estate property. Have your grandkids create ads if you do Airbnb. Have your grandkids do the paperwork when it comes to the rental agreements and pay them for that. And now you shift up to $15,000 per grandchild of income from you to them, a write-off again of up to $5,000. And for them, they pay no taxes because the standard deduction is $15,000. This is income shifting. So we have spend to save at the bottom of the pyramid. In the middle, the income shifting. But then we have the top of the pyramid, which is asset-based. Asset-based. What is an asset-based tax strategy? And why is it at the top of the pyramid? Because, my friends, this gets you the most money, the biggest reward, present and in the future. So what is it? Well, it's us buying assets. It's asset-based. Buying things. Not something depreciating like a laptop. No. Buying real estate. You see, in the tax code, you get rewarded the most, the biggest, the best. The most gratifying Uncle Sam wants you to do is buying two things, either a business or real estate. Why that is, I don't know. I didn't do the tax code years ago. But we get rewarded the most because we buy a business or real estate. And see, these investments, they both generate income, right? Income generating assets. We get the best of both worlds. Theoretically speaking, our real estate goes up over time and we're getting paid for it. Theoretically speaking, the value of the business goes up over time. Depending on how we're structured, we're getting dividends. We get a nice lump sum doing that exit strategy. But the IRS rewards you by doing that. And that is an asset-based. And because it's asset-based, guess what? We get the largest deduction of them all. We buy us a property, real estate. guess what we can do? We get paid by the IRS because the value of the property is going to have aches and pains, just like your body. But the IRS calls that depreciation. The walls will need to be painted over time. The pipes will need to be changed over time. They know that, and you're going to spend money over time to do that, so they allow you to depreciate the value of that house over a 27-year time period. Theoretically speaking, we buy a $100,000 house, they're going to allow you every single year $3,000 a year that they give you because the value of your house, things will happen. Well, because the investor, I bought that, I can do something called a cost segregation study and have that 27-year of deduction that they're going to give me, not in 27 years, but in the first 5 years. So if the IRS is going to give me my $100,000 back over 27 years, wouldn't it be great if they gave me a large amount of that back in 5 years? If it's $100,000, you're going to give me $100,000 in 5 years instead of 27 years, theoretically speaking. What can I do with that? I can take that money that you gave me, that $20,000 a year, and I can buy another property and another property and another property and have the IRS continue to do that. And with the cash flow I'm receiving, invest that into income shifting, right? Paying my children because now I have the money. Putting money into their Roth IRA or their traditional IRA. Setting up a 401k for my own business called a SEP IRA, or doing a 401k in your business, which is a solo 401k, where you can put up to $70,000 a year. And because I have all this money, now it's okay at the bottom of the pyramid if I buy that car that I didn't need, but I got the money to, and appreciate that as well. Buy that laptop for my child because I can. Well, it's for me, but your child uses your laptop. You know how that is. They're under your roof, right? What's yours is theirs. It's your kids. But that is how the pyramid of tax planning works. Let's not start at the bottom. Let's not spend to save, then income shift, then asset base. We want to start at the top of the pyramid and work ourselves down. Buy you those investment properties. Do a cost segregation study. Make sure one of the properties is a short-term rental, which means active participation, which means now all the income that you make, you can write off on all your expenses, not just your rental income. By doing those things and having that asset-based top of the pyramid, we then have more money to do the income shifting. We have more money to do the spend and save. We work our way down the pyramid, not up the pyramid. This is how we obtain wealth. This is how the rich get richer. This is the tax game, and why the rich don't just save, they shift and stack. My question for you: what are you going to do going forward? Are you going to continue what you're doing? Are you going to make a change? And what's the cost of you continuing? Because if you continue doing what you're doing from a tax standpoint, believe you me, this time next year, you're in the same place. Compared to if we do things different, the uncomfortable things when it comes to our taxes, hiring a tax strategist like myself and others to allow you to use the tax pyramid at your advantage. Yes, it'll cost a little bit up front, but the reward is a lot more and a lot better than where you be next year by doing nothing. Your thoughts, your comments, your suggestions, put in the comments. Then you like. Then you subscribe to our channel. Then share this with 5 more people and then comment again. Is it any other tax hacks that I forgot about? Is these tax hacks you think we can't do? Let me know why we can't do them in the comments. Because the more we engage, the more information flows to everybody else, and the more we are thinking, good or bad, how to use the pyramid of tax planning. So in closing, spend to save, income shift, asset base. But let's not start from the bottom to the top. Let's start from the top and go down. Asset based, income shift, and then we spend to save. Love is love, you guys. As always, let's make some painful or painless profits together, y'all. Peace.